What's the most frequent piece of advice that people ask you for?
Apart from what I discussed earlier about what is, what makes the business successful, what you need to do to be successful. I think it's just more about, I guess the dream was always that I'd have a listed business. In a way, I thought that'd be amazing. That's what I wanted to do. And I've made, the decision early in life that if I was going to run my own business, I wouldn't do it that way, and I wouldn't do this and I wouldn't do that. It was January, I remember, we were going out and searching out for the brokers and sort of accountants and various other people that had to take us through the process. And the process took about 6 months. So we were just about to launch. And literally that week, I think the stock market fell by 900 points in a couple of days.
You don't like MAB being referred to as a network, do you?
Thanks for bringing it up. I think I got quoted in the Financial Times the first time ever. And I never will do ever again.
Welcome to this summer special edition of the Mortgage Mingle podcast, the podcast made by mortgage professionals for mortgage professionals. Today, we're thrilled to be joined by Peter Brodnicki, a name synonymous with success and excellence in the mortgage world. Peter has been the CEO of Mortgage Advice Bureau for over 20 years, transforming it into arguably the UK's most recognised intermediary brand. With a network of over 2,000 advisors, MAB arranges more than £25 billion worth of mortgage loans annually and was the first mortgage intermediary to float on the London Stock Exchange. When Peter isn't busy leading MAB to new heights, he enjoys designing bespoke homes and following his beloved Fulham Football Club. We will probe his brilliant mind, ask him questions he's never been asked before, and find out the secret to his success. Let's dive right in. Peter Brodnicki, thank you so much for joining us today. The way these things work is we sort of talk a little bit about the industry, the market and everything else, and then we ask you really awkward questions and you can decide whether you're going to answer them or not.
Bearing in mind, Peter does represent an AIM-listed company.
Yeah, you've got to be careful.
I guess you would have to be a little bit careful.
No comment, no comment.
Yeah, I know. One of the things I was going to ask you is what sort of thing would you have to say that would actually affect your share price, either positively or negatively?
Yeah, my market predictions for a start. So, yeah, I think I'm right.
Yeah. I had a big delay in the airport last night, so I am hanging today as well.
Yeah. So
I'll try and be upbeat.
That was a little bit of a sneaky trip to Crete, wasn't it?
Yeah. Had some Avios points and some BA vouchers I need to get rid of. So I just, collected the family and said, right, gang, let's just disappear for a little while. Yeah, came back. We were supposed to be back at about midnight yesterday, but we ended up landing at about 4 or 4:30. Got home at about 5:30, I think, from Luton. But my God, it's been unbelievable. And we probably should save this, but when we actually go into things, but the rates have been incredible. It's been brilliant. And I'm so conscious. I was so down on everything was it last week or the week before?
It's because you've had a fishing day, you've had a holiday, and you've only got about 3 days to fit this thing in before your next holiday.
Mm-hmm. Yeah, but I can
That's why you're busy, mate.
That's why you're busy. Your 2 leads that have been crammed into one afternoon.
Steady on that one.
How was the fishing, by the way? Did you,
fishing was brilliant. Yeah, it was really, really good, actually. We had a few last minute dropouts, but everyone just seemed to love the day. So that's definitely going to happen again. It was really, really good.
There's always one that gets away.
Talking of fishing.
I'm here all week.
Talking of fishing, though, Peter, how's the fishing at? I haven't asked you about that for ages.
I know. In a few weeks, is about to relaunch with a whole load of exciting new features. So Go Catch is the app. So and it's for fishermen, it's going to have so much information and data on it. It's unbelievable. So
all right. So this is another one of these investments. One of your investments, yes.
I've only invested in people I know, and currently I know a fisherman. So
apparently,
who knew until he came with the app idea? I've never had fish talk with them before.
Are you a fisher person?
I know more about carp now than I ever knew before. I can tell you that much. But so
remind us, what is it again? Go what?
Go Catch.
And what does it actually do? What does it help you with?
God knows. I just invested. No, it's. I mean, it's an online booking app which you can't book, for fisheries and lakes.
Yeah.
normally, and it gives you all the reports on the lakes and everything else. But now it's going into weather reports, which parts of the lakes everybody's caught fish, and you can literally track what everybody else is doing and how they're doing it and where they're fishing.
It's a really good idea. When you told me about it, I thought that's a really good idea.
It's the one sector that technology hasn't caught up with, and I found.
I think what is not to love about a load of blokes in a lake in waders, all in the same place. Because the week before it's caught a massive great big. It is. I mean, tonight I will just sleep thinking about that.
Blokes in waders.
Blokes in waders, all stood together in a river or a lake.
That's a different app altogether, Louise. A different app altogether.
Okay, but this is...
Don't tell me you've invested in an app for that.
The thing that's really fascinating is, it's quite an obscure thing to invest in, isn't it? So is this like you've got a mate and he says, right, first, does anyone call you Pete or does everyone call you Peter? Is Pete, you can smash
some Pete call me Pete, but I prefer they call me Peter.
Yeah. Sorry, do you have like really close friends?
After 28 years, sorry about that.
No, but do you know what I mean? Do you have like really close friends or is it like a family thing, or is it there's a line and you go, no, it's Peter, everyone's Peter?
No, I mean, if they ask me, I always say Peter. I don't correct them if they say Pete. Yeah. Well, my very best close friend calls me Pete, and he doesn't know I want to be called Peter, and I've never told him. So.
No way. You learn something new every day, don't you? You must have a nickname though, Peter. Is there a nickname you've got that you'd like to share with us all? Or not?
Not what I'd like to share with you, no, not at all. No, absolutely not. You talk about fishing, and it's like fishing is... It's interesting because I've done a few like angel investments and things and completely different things. And 80% probably, maybe 90% of each business is identical. It has exactly the same issues. It has the same challenges. And I always thought, if you're a mortgage business, well, I can only help mortgage business. But when you start looking at other businesses and you go, actually, they're the same issues. Technology issues, people issues, recruitment issues, lead generation issues, marketing issues. It's all exactly the same. Just the subject's different. So it's amazing actually how much you know that can be of use to many other people in different industries, because the base principles of everything are pretty much the same, aren't they? So,
So I've said in the intro that arguably you're the most successful person in our industry. Okay, so but how much of that is down to your vision and hard work, and how much is down to luck? Would you say?
I think everybody needs a bit of luck. I think everything in life's about timing. Got the right idea, the right people at the wrong time, things don't work out. So, everybody needs a little bit of luck. I don't think that's I think everybody accepts that. I think when everybody asks me what do you think makes you successful, and it took me ages to work that out, and it was very simple. It was about making decisions, because, I've got friends that are massively more intelligent than me. They know exactly what to do in so many different situations. They're so sharp, but then they're not decision makers. They sort of know what to do, but they're not going to take the risks. So I think if you want to ever achieve anything exceptional in life, you have to take risks, and it can be calculated risks. And you've also got to make decisions. And so many people sort of know what they need to do, but they just don't get on and make the decision, or they make it too late, or they're terrified of it not working. So actually, by not being frightened of making decisions, therefore getting things wrong, and you learn more things from getting things wrong than you do from getting things right. You've got to make those decisions, and you will know people like that. You'll know people like that, that are way more intelligent and do stuff, and yet they don't make the decisions, and therefore they'll never get into business. But if you're going to make loads of decisions, you've also got to be able to U-turn immediately. You decide and understand that decision was the wrong one, because again, I see a lot of people make a decision, and then when they see it's not the right one, they just swear blind it is the right one and just spend as much time as possible trying to prove that they're right when they know they're wrong.
So in today's speak, what you're saying is number one, take action, and number two, be prepared to pivot if you need to.
And quickly. You're better to make 100 decisions and get 30 wrong very quickly, and then just sort of move and change and acknowledge that and change it again, because the point is, by making lots of decisions, you're going to get more wrong, all right? But if you're worried about getting stuff wrong, you'll never make decisions. And then, I guess in the 24 years I've been running MAB, there's probably been sort of, probably 4 or 5 critical points where, which stand out to me, where I had to make a decision. And it was probably opposite to what a lot of other people would have made a decision on at that point. So, and so far at least, touch wood, they've worked out for me. But there's always certain points in life where you realize this is a pivotal point, and the decision I make right now is going to make a big decision about how things work out moving forward. And, whether that's to do with markets or global financial crisis or.
Yeah, I think you have this gift of vision. When I look back over my career in the industry, I look at people like John Garfield. And for those who don't know who that is, that's the John in John Charcoal, John, Charles and Colin. Now, we all know that, he's a character, but I think that he had vision.
Very, very many years ago in the late 80s, the first job I had was to go and pick his car up, which had been
we all had that job,
towed away. So I had to get it from the pound and pick his car up. And I think I'd never driven a car like this. And I had to drive it back and pick it up for him. That was my first job. I thought, fantastic, great.
So I love this story about you, Peter, because
I must have picked something up from that picking up of the car.
Yeah.
Didn't you start in an admin role? So you've literally been through pretty much every position effectively in the broker side. So you started, was it admin at Charcoal that you started?
Yeah, I sort of run back office teams and underwriting teams and stuff in there rather than the sales bit. And then I decided, no, this is not right for me. I want to go and get into sales. That's where the money is, right? But I think the day I decided to do that, and the minute I started, the market crashed. That was back in 1980, I think. So my timing was absolutely shocking. So I planned it for years, and I thought, right, I need to do this now, and I did it. And then literally the market collapsed. So there you go.
But the converse of that is, I remember when you were growing MAB just after the credit crunch, and I was thinking, is this guy crazy? But clearly not. So what was it then? What changed in you then that you thought, right, okay, there's an opportunity here. Everyone seems to be running to the hills, but I'm going the other way.
That's the whole point, going the other way is when the going gets tough, it's harder to stand out from the crowd and make the opportunity. And I think for many years, I've kept my head down. I didn't really go to industry events, and I probably only started around 2008, to be honest. I missed out on most of the fun. So at that point, I think we just got to a point where we'd actually made some profits, a reasonable profit for the first time, having reinvested. And then suddenly the market collapsed, and we had a choice. Do we sort of, buckle down and cut costs? But it took me so long to build a really good team, I didn't really want to get rid of them. And I've made some money in 1 year, and it wasn't a lot in today's standards. But it was a lot then. And we just got in a room and said, right, okay, well, let's ring fence this cash, and this is how much we're prepared to lose this year. But what we've got to go flat out, grow the business, and make sure that we justify the overheads we've got. So this is our opportunity. We've got a model to help businesses grow. And in a market where the market's halved or more than halved, we've got the same principle of growing businesses is about replacing the business you've lost. It's the same principle. You've got to grow. So we took our model and adapted it to that market, which was basically the same principle, and go, right, that's what we've got to do. And that's what we did. And actually at the end of that year, we actually made a very, very small profit, but technically it was a profit. And I was already ring fenced and expected that if we blow through this cash, then we have to buckle down and do what everybody else does. But we managed to make it work, and everybody pulled together and go, this is our objective. There's so much we've got to play with. We've got to make this work. So we went the complete opposite direction, and that was our chance to sort of really get back on, back on track again. And that's what happened, really. So, yeah.
That's when that 2008, 2009, that's when we started to get to know you and the team, and that passion you had it always attracted me to you sorry, I'll rephrase
Not in that way.
Not in that way. Well, I don't know. No, it was that determination, that passion, the good people around you, and vision, and I totally agree with you. It wasn't just a decisiveness; it's being able to go, do you know what? I wanted to do that. That's not right. I'm now going to do this. I always really like that, because that's really important, because you're right. I've seen too many people just go, no, I can't appear to be wrong. I can't appear to change my mind. And that is more of a skill than a lot of people think it is, because so many people get carried away. Correct. Yeah. They think it's weakness. They get caught up in their own publicity. And actually that's one of your superpowers. I don't think you do. You're not afraid to say, do you know what? No, we're going in this direction because that's where the market's going. And you always, I've always said the one thing, you talk to anyone. Anyone can phone you and you'll pick up the time and give them that time. And that's brilliant.
And that's, I never want to lose that because, I need to talk to everybody because I want to hear everybody's view and opinion. Doesn't matter where they are and what they do. They all have they're all an important part of what we do as an industry, what we do as a business. I want everybody's opinions, good, bad, and indifferent. I need to hear it, so I'll always stay close to the detail and not sort of sit here trying to work out what to do.
Did you have a mentor in your earlier life?
Not a mentor I went out and got, and obviously a lot of people suggested it, and I didn't.
Just a natural one,
No, I guess my mentor, who I guess was my dad. He died the year I started this business, and I guess he ran his own business. It was very specialist. It was like pharmaceutical translations. He spoke a lot of languages, but it was a very niche market with very few players. So when he was dying, he couldn't really sell it to anybody. In fact, he got taken advantage of. There's only one potential acquirer. And so, all that hard work sort of, unfortunately didn't pay dividends for him in the end. But I watched what he did and he was always a glass half full person, as I am. And, he took chances, he took risks, probably too many. And he got a lot of things right, but also an awful lot of things wrong. And I learned a lot from him because he was a person, and he got me, at an early stage, he got me, I think when I was 13, maybe 13. For my birthday, I got like 50 quid of shares or something like that in a small business. And he got me to start track businesses and how they were doing and how their share price was doing, what made them successful. And I found that really interesting. So he got me into sort of looking at, the stock market and how businesses operate. And then, my 50 quids went up to 70 quids and stuff like that. I never got anything nice. I just got shares. But it was very, very interesting, and it got me into it. It got me tracking businesses. I was fascinated with the stock market. And I guess a dream was always that I'd have a listed business. In a way, I thought that'd be amazing. That's what I wanted to do, but I started learning about business at an early stage, through that, I guess, and also through what he did. And I've made, a decision early in life that if I was going to run my own business, I wouldn't do it that way, and I wouldn't do this, and I wouldn't do that. Yeah. So I learned more things from him, ironically, but helped me more that I wouldn't do like he did.
That's fascinating because I think you're the first mortgage intermediary to IPO. Is that right? Yeah.
Yep, I think so, yeah.
And doing an IPO is a mammoth task. Lots of moving parts, lots of lawyers, lots of selling to face to face to large investors, that sort of thing.
I guess in a way we sort of just before the global financial crisis, we had some offers for the business,
right?
But weren't really keen on doing anything. But before we could make a decision, one way or the other, obviously events took over. Then as we built the business after that crisis and started to do well, we got some more interest. At that point, I had to sort of consider what we wanted to do. And I really didn't see the value of anybody that was interested in what they could do to my business, how they could improve it. I had a lot of loyalties to the people we brought on, the firms we brought on, the staff, and I couldn't see how through a sale or they would benefit or the proposition would benefit. So I didn't make any of those decisions. And being a bit of a control freak, I looked into different options, and obviously one of them was listing. And so to me, although there was a lot of hard work and a lot of risk attached to it, a lot of cost attached to it, I felt it could help us get to the next level and reward everybody in the business that's put the loyalty in so far, and then get them involved where I remember once working for Legal & General, and I have a small number of shares I got through a staff scheme, whatever it might be. I remember constantly looking at the share price and how L&G are doing. And I thought that would be a great idea for our staff, and so we could reward them in those ways, those tax efficient benefits, and then bring them on the next stage of the journey and use that as a platform to take us to the next level. So we went through that process, and when we started the process, it was the market was flying. It was January, I remember, and we were going out and searching out for the brokers and sort of accountants and various other people that had to take us through the process. And the process took about 6 months, so we were just about to launch. And literally that week, I think the stock market fell by 900 points in a couple of days. I think Miller Homes and Virgin were due to list that week, and they both pulled their listings. And I remember sort of being in a taxi with my ops director, sort of about to go to these investor meetings. So what we're going to do? We're going to run, or we're going to pull, because everybody else is pulling. Our broker said pull, come back, but we couldn't afford to do that. A little bit in the same situation as was back in 2008. We'd spent so much time. It was such a big distraction to the business. We couldn't afford that time out again. We couldn't spend the money again. And I thought we just got to go for it. So at that point, I just took no advice whatsoever that I was given and just went for it. And I just felt very crudely. I thought, well, at least investors are going to see us because no one else is seeing them. What else are they going to do? So we went and saw them, and we got the listing away eventually by the skin of our teeth. Most stressful week of my life. And then I think I got quoted in the Financial Times the first time ever, and I never will do ever again, because I was the only stock, a tiny little stock that listed. And it said, I can't remember the exact words, I've got it somewhere, but, Peter Brodnicki is either a genius or a complete idiot or something like that. It was listed.
Or both.
Or both, so,
a mad genius.
I think an accidental mad genius and definitely an idiot. So we managed to get away with it. But again, it was just another example of saying, like they built the team back in 2008. I didn't want to go back. I wanted to go forward, and, I might not get that chance again. And I just went for it. And, that was a gamble, and but it paid off.
Before we ask Peter another question, Lee, do you want to give us a bit of an update? If we went on your predictions last week, we'd be down a lot of cash, wouldn't we?
Do we even need to hear it?
Yeah, exactly. To be honest, I was just happy just sitting there listening to Peter. I know this is a podcast.
Well, me too. I just was being polite to you.
That's great. Thanks, mate. I appreciate that. Very, very much appreciate it. Yeah, so swaps are looking pretty good, relatively stable. 4.76 for a 1 year, 4.36 for 2, 5 years still at 3.8. As I alluded to earlier, coming back today, just seen rate drop after rate drop. We've seen the big news that Nationwide has just gone below 4%. At 3.99, not on remortgages yet. It's only on purchases, but altogether, it's just positive to see that kind of consumer confidence, and hopefully that will ripple into some of the others. But interestingly, what I thought on that was looking at their rates that have been issued, is that they increased the margins on the tracker, and it's the first lender I think that I've seen edge up the loading on a tracker, which kind of instills a little bit more confidence that a cut is on the way. I still think September personally, but it's starting to look like some people are starting to believe August, including the guy we were speaking to before with his £2 million bet on a cut in August. It seems to be there's a little bit of confidence that maybe that would happen. My money's still on September personally, but yeah, that pricing from Nationwide this morning did make me think, hang on a minute, are we missing a trick? Is it going to be coming a little bit sooner? But that 3.99 is huge. So I'm sure we'll see some more. I was doing some sourcing this morning for a client, and I'm quoting 4.06 within a second. 3.99 to become available. And it also makes you think, will you start seeing a little bit more attraction to 5-year money again now? Because, we're not going to see big changes over that period. So will 5 years suddenly become a little bit more in vogue again?
I think you will. As soon as you got a 3 in front of a 5 year, we saw that earlier in the year, didn't we? That actually, that was a bit of a catalyst. And if you look at some of the wage growth data that's feeding through at the moment, that's on the way down as well. So they think actually service inflation might reduce. So I still think it's sort of 40% chance of an August cut. But
I think that's what they're suggesting, isn't it?
Yeah.
So what are you saying to your clients then? What are you advising them? I know it's a general question, but when you talk about 5 years, when they're asking you, should we fix for 5 years? What's your answer?
It's always been always.
Yeah, I mean, we've been saying 2-year trackers for quite some time, but I think we're getting to that pivot point where you have to look at 5 year again, and you have to consider, with it starting with a 3, when you price into the fact that these 2-year deals and trackers are all going to have arrangement fees, and you've got 3 reciprocal rounds on a 2-year fixed versus a 5. It's not just that differential in rate and how low it needs to go on a 2-year in 2 years' time. You've got to build in the fees as well. So 5-year money is definitely back in conversation now, without a shadow of a doubt.
And also, although rates are falling and the destination is downwards, I still don't think they're falling quickly over the next couple of years. So actually, if you get 5-year money at 3.99, it's affordable to you now, and you want that security, then it's fine, rather than trying to play the market.
I think you're right. And you've also got to think about house price inflation. At the end of the day, you don't want to be slapping on a 3% fee, for example, for 2 years, because the chances of you actually getting that back, is probably unlikely over that short period of time. So I think you're absolutely right. 5 years seems to work. It certainly works within the buy-to-let arena, because clearly it's all around how much they can borrow. Although that said, actually, 2-year fixes are trending higher than 5-year fixes at the moment, and buy-to-let. So
really, in buy-to-let, that's interesting.
Not necessarily with us. We're still seeing a reasonable level of 2-year fixes, about 30% of our business. But if you look at sourcing, 2 years are forming a bigger part of the sourcing arena than 5 years at the minute.
So presumably loan to values are dropping as well then, are they, on that basis?
Yeah, loan to values are coming down. You're talking sub 75%, and normally about 70% just at the minute on that. So you're seeing loan to values come down. But I do think that buy-to-let landlord is more sensitive towards those longer term fixed rates. And in particular, some of them that have got 5% fees, we've seen some of them with ridiculous fees just at the moment. So I do think that they are marginally more sensitive. But similarly, you're seeing a lot of landlords that are sat on SVRs. We've talked about this before. A growing number of landlords are just unsure as to what the future holds for them, and holding out for potentially some rate reductions, which again, I'm not sure that they're going to see a massive number.
Some of those are sitting in double figures, those SVRs, aren't they? Some of them are 10s, 11%.
Yeah, some of the old numbers are, and that's some of that very, very old stock. So pre-credit crunch stock that's sat on SVR is in 10s, 11s. The only thing about those is that the loan sizes are much smaller. So again, it's not quite as big an impact as some of the more recent loans that have got higher loan sizes.
I was going to ask the great P, if you do loads of investor roadshows, obviously. Obviously, the last 18 months have been a bit tricky. What are you seeing the sort of H2 of this year going into next year, and how your investors feeling generally about the market and housing and going forward?
There's always that sort of, the worry about cycles, even though we've been through so many cycles, and we've gone through it well, but every time you go through a cycle again, or a negative cycle, they're nervous about it. But as I keep trying to reassure them, is to say, look, we never lose a housing transaction ever. It doesn't happen. So, and so there might be a delay to it, and the market, we might have lost 300,000 or 400,000 or whatever it might be, housing transactions in the last 18 months, 2 years. But we'll get them back. We'll get back up to that sort of normal 1.1, 1.2 million transactions, and we'll make up the balance, because those transactions will still happen. So, if they're investing in that longer term, don't worry about it. This is a cycle, and it shouldn't be an issue. And I think the point you're making about sort of terms of fixed rates and stuff, it's all very well looking at the economy and whether that's trending in the right direction, and what rates are going to be. But I think our customers, and we have all seen, there are so many external factors now, nothing to do with the UK economy, that could railroad interest rates and what happens so easily and so quickly. And you can even see some on the horizon, without mentioning any specific examples, where I think I'd rather be in a rate that starts with a 3 and fix it for 5 years. Because you can only control what you can control, and it's hard enough to control your own economy, never mind what's happening worldwide. And so to me, I think that has to be something people have to consider as well, to be honest.
Peter, can I ask another question? There's been quite a shift in H1 of this year of people going from DA to ARs. I think it's the first time they've actually seen such a big shift in proportion of the DAs. The AR shift being bigger than the DAs. I know we've often spoken about this. MAB get mentioned in network figures and how many people you have in networks. You don't like MAB being referred to as a network, do you?
Thanks for bringing it up. Yeah. Well, look. Networks are really important. They fulfill a really important role. We just happen to, over a period of time, create our own niche and decide we want to be something slightly different, although we do fulfill aspects of what a network does. So, if you look at the average network numbers, they're around, firm sizes around 2, give or take. But that's because there's a lot of 1-man, 2-man bands, and obviously there are some bigger firms. Whereas, we sort of tend to focus in the market, on firms that are aspirational, want to grow, maybe have outgrown their network, feeling isolated as a DA, and want more of a strategic partner. And also, I think we're at a stage now where, I think the world's going to change. I know there's been a lot of talk about tech, but consumers are changing, technology is changing that consumer behavior. You overlay AI with tech developments and platform developments, and you're seeing a very different picture. And, how does that impact on how brokers operate, how we generate leads? I think it should, massively strengthen the intermediary proposition, which is already very compelling. But business models will change. Sort of business models are going to be successful moving forward, and do you think that migration will be bigger? Do you think you'll see more DAs going to ARs because of that? Yeah, and I do, because I think as you start to see things changing, you need someone to help them, I guess a network will facilitate your business, but you've also got to be able to help these people, advise them about what structures of businesses work, how these changes are going to impact on them, which types of models are going to be most successful, how we're going to counteract impact on their lead generation. Is that a positive? Is that a negative? Because as we start to see change, there are always major losers, but also major winners, depending on who gauges this right and is prepared properly for it. So, everybody can tweak around with different platforms and different pay structures and different commission, different compliance structures and viewpoints on consumer duty. But ultimately, we're consumer-focused businesses, and if the consumer's changing and they're going to be researching in a different way at an earlier stage, and they're going to be wanting to research, and transact in different ways, receive advice in different ways, models have got to reflect that. Yeah. So I do think there will be some change. And I was talking to a couple of people that would, recently that are just starting their business and go, well, what type of model are you looking to build then? Because, and other businesses that got to a certain point over 10 years, what do you want to do over the next 10 years? But the market's going to be very different. The environment's going to be very different. How you capture leads, how you nurture leads, how you deal with your customers, and how your brokers engage with technology, and whether you're employed or self-employed or centralized telephone. All those things have to be thought about. And I don't think you can start a business now or think about expanding a business unless you think about how the world could be changing, and then start to consider that, not just, can I have a better software system? Can I have can I pay less for my compliance? Can I do it? You've got to think about where the market's heading, where the consumer's heading, and how it's going to affect our business, and where the opportunities will be and where the risks will be. And I think we're at that sweet spot now where I think, that will start to change without a shadow of a doubt.
From a broker perspective, there's always been the DA versus AR question in the back of every broker's mind, I think. But now, from my perspective, I feel like now, I'm probably going to upset a lot of people here by saying this, but now more than ever, with such uncertainty, there's safety in numbers, and that element of being an AR under such a huge firm gives you protection. Maybe I'm being naive with that, but
do you think that from a broker's perception, they believe that the ARs are less entrepreneurial, should we say? Because that's what you tend to find, that the DAs believe, whether it's right or wrong, and have no feelings one way or the other, but their belief is that they are more entrepreneurial. They can be a bit freer with their advice. They can go off and do things that maybe if you were confined within an AR structure, you can't quite do the same things. I don't know whether, as I say, whether that is an accurate perception, or we need to change that, or what's.
It is. There are two things on that. One is, in reality, and Peter will tell you this, looking at the MAB firms, they're just as entrepreneurial in terms of they want to run businesses, they want to grow a business. There are certain things that we can't do as an AR that we can do as a DA, which is why we have two arms. We have an AR arm and a DA arm. Now that's not necessarily a bad thing, because obviously the AR is there to protect as well, and to make sure that there's that you act within the regulation. Okay, DA is there are certain things that you can do. A great example is dealing with people who are overseas, for example. Some ARs will have an issue with that. DAs will just go on and do it, and often they'll go on and do it without actually really thinking about the consequences, and maybe they'll do that wrong. So it's there are certain things that you can't do, but that doesn't mean you can't be entrepreneurial.
You can have specialisms within an AR network anyway, can't you? So, for example, you could have
absolutely.
A bridging firm within an AR network that support that sort of thing, or like you say, overseas.
You begin to see some commercial networks now as well. interestingly.
Yeah.
But Peter, you touched on, you mentioned earlier, just briefly a minute ago, that you're talking to a company that was just starting out. And the question I've got on my mind there is, what's the most frequent piece of advice that people ask you for?
Apart from what I discussed earlier about what is, what makes the business successful, what you need to do to be successful. I think it's just more about now they're asking. It depends who you are. If you're starting a new business or you're looking to expand the business or acquire or do whatever you want to do, it's more about everything is focusing a lot more around lead generation, because it doesn't matter what business you're in. First and foremost, a broker has to be a lead gen company in a way, because it doesn't matter what you do beyond that point, unless you've got lead funnel coming in and you understand how those leads could be affected with change, how scalable those lead sources, how expensive those lead sources, what's the quality of those lead sources. That to me is everything. Once you control lead flow, then you can start to plan how you grow your business, because, if you can't control lead flow, then you should have a self-employed model. If you can fully control lead flow, clearly it makes more sense for you to have an employed model. And it's as black and white as that, because the differences are quite stark in terms of what you control. If you can't control leads, then you have an employed model, then you've got a problem, because you've combined two things that aren't compatible. So to me, I always say to businesses, the first thing you need to look at is tell me about your lead generation capabilities. And, it's not just about bringing new customers in. Lead generation is about retaining existing customers. It's about making sure you sell the protection on the back of existing customers. That's all lead generation. You're creating another opportunity, to do business. And really analyzing that and understanding it and making it an exact science. And then everything flows out from there. The decisions you take, the sort of levels of risks you can take, how much investment you put in, they've got to be driven around that level of certainty. So when you're talking about how's the impact of technology and AI going to be, everybody talks about simplicity of the process and the simplicity of the ease of transaction and the capacity increase of brokers in terms of what they're going to be able to do, and the lack of duplication and the ease of transaction, etc. And that will all happen. That's not going to be a differentiator in time. That's just going to be something we're all going to be able to do an awful lot better for the benefit of the broker, the customer, and also the business owner. But what else can it disrupt? Can it disrupt how you capture customers currently? That's my job. But most of my other job is to look in the business and go, what could go wrong here? Who could eat our lunch? Take absolutely nothing for granted, so that the partners that work with us can focus on the growth of their business and rely on me, on my team, looking and protecting them in terms of what could happen moving forward. And we're not just about compliance protection in terms of making sure the business you do is high quality. It's about protection of future changes in our market, and how do we as a sector, how can we take advantage of that? How can we protect ourselves against it as well, and plan for it? And by planning and looking into it, how can we actually lead in that change and actually benefit from it? So to me, that's a big part of what we do. Us is a bit of an insurance company. If you're buying a theatre ticket for 80 quid and you're offered an insurance of 5 quid, to say what happens if you can't make it and circumstances change. Well, that's it. I see as part of what we do is that insurance policy that protects the business and goes, that's our job full time, to look at that and test and learn and make sure that you can carry on and plan long term ahead.
Yeah. So it's been a challenging time for brokers, whether you're AR or DA. But what do you do? What does the leadership team at MAB do to support the brokers within the group and help them thrive?
I mean, from our perspective, I'm always quite self-critical. Always want to do more and do more faster. It doesn't matter how big we've now got and how many people we've got. I'm still as impatient as I was 10, 20 years ago, and I'm still not happy about how fast things are done. But apparently that's how it works. So, but the team is, the reason I guess we only deal with far less firms, bigger firms where we have far longer term relationships with, is that we don't have to keep filling the hopper. We work with the same firms in the long term, and so our team, when someone comes to see us and, you make a presentation to somebody, guess what? Those people you can still speak to from the CEO downwards. It won't be just your local regional manager or compliance person. It'll be the whole team. And depending on how you need them, when you need them. So the reason because we can work with a lot less firms, we can spend a lot more time understanding what they do. And 20% of our distribution now, and I think this is a massive benefit to us, is our businesses that we either own outright or have a significant investment in. And you've got to remember, when we started this, we started as a broker and we evolved out into this. And so we act and think as a broker. We only enter broker awards because we are a broker in our own right. And so when the brokers go through pain or tough markets, we go through the same pain and tough markets. So we have to be close to them, and then we can test and learn without them having to go through the expense of testing and learning. So, to me, we're very hands-on in terms of understanding the detail. And if you look at the number of people we have for the number of brokers, it's probably a very high ratio compared to others. But they're not back office people. They're people engaged with those brokers with different areas of expertise. And trying to share that knowledge and with others that are on different journeys, trying to grow different models. And how do I go from this model to this model? Because, this is my culture, this is what I do, but I need to do this. How do I do it? How do I transition? I'm a business owner that, has got 8 or 10 advisors, and I'm the highest producing one. So is my partner. How do I go to work on the business rather than be in the business? Because I can't afford to drop my production, because these are sort of things and the pains that a lot of businesses have, and it's hard for them because, in reality, a lot of them are going to go, well, actually, it's probably better off just being 2 advisors or 2 partners. And because you've got this pain barrier you've got to get over before you get to that next level. So, sometimes you've got to help people in terms of how do I get over that? How do I turn into scalable business rather? I'm back on my phone. My laptop died.
Well, we won't keep you for too much longer. I really appreciate you just saying a little bit extra with the technical issues. So, is there a belief you hold that most people would disagree with you on?
Where do I start? I don't think so. I think whenever I talk to anybody about what we think and what we do, I don't think anybody disagrees with it. I think, in many cases they can understand that way of thinking. But maybe they don't see it as important, or maybe with the same level of urgency as I do. I think a lot of people will think, okay, that could happen, but it's a way off and it might not happen. But I can see why you're thinking that way, and I can see why you talk that way. But maybe aren't attaching enough level of importance to it. And I tend to think, I tend to think short, medium, and long term. I have to look at all 3, and my investors expect me to think that way too. And maybe not everybody. That's maybe not a natural thing for everybody to do. A lot of people want to deal with what's in front of them right now and deal with that issue. Maybe look a little bit ahead. Maybe sometimes how I talk, people are going to, probably think it's too radical, too far off. But I don't think they ever disagree with the principle.
If I asked you where in an ideal world will you be in 5 years, is that one of those questions that you can't really answer because it could affect
Well, I've nearly completed my 5th 5-year plan. So I always say I've got a 5-year plan, and I always sell that to everybody, and 25 years later they're still here. But yeah, I think if you try and plan anything over 5 years, I think that's near on impossible to do. And to me, if I had to be honest, and I'll share with you what I've said to others, I just think the next 5 years is the most exciting. It's the 5 years I've been waiting for, I guess, all my life.
I agree.
Where I think, we can turn this whole intermediary sector and how we engage with our customers and what the value we can add to our customers into far more of an exact science. And that's fantastic in terms of growing and planning your business and giving exceptional value to your customers. I think we're in a position now where the information, the data, the AI, and everything we do, the information comes to the business so the business can absorb it and decide the direction of travel and how it engages with its customers and brokers. Whereas actually, probably up till now, 90% of what we do is in the broker's head and stays in the broker's head. So we don't learn from it. We don't learn from all the transactions that we don't complete. We learn from the ones we do. And to me, it's just an exceptionally exciting time, which will come with its risks because there will be some big changes, I believe. But the bigger the risk, the bigger the opportunity, the way I look at it. And it's one of those times I talked about earlier, where I think if you're you're thinking about stuff the right way, there's just going to be a huge opportunity.
It's just going to be phenomenal, and you can absolutely mold your business based on how to transact with customers and how they want to transact with us. And I think you're absolutely spot on, and we're in a really strong position to do that. I think one of the top 5 banks, which will remain nameless, have now got data on their current accounts, and they can see for joint accounts within 96% of accuracy how many of those customers are going to divorce in the next 2 years. Based on the behaviour of those customers and their buying trends and things. It is phenomenal. And this is the sort of stuff that we should really be getting under the skin of, because it's
OnlyFans gets everywhere, doesn't it? That's
And I've got an investment in a dating company in case that happens.
Oh yeah, that's the other one. What's that one called? Because this is
Ignite Dating.
Say it again.
Ignite Dating.
Right. Now, is this the one that, can we say that you met special somebody online, or you just had a...
Yeah. I met my partner through the person I backed in business to set this business up, because I tried something new with them to say, I think this would work better for me. And then we built a business on the back of it. So she built a business on the back of it. So yeah. It's
we should have a spin-off to this of Peter's Den, where people come in pitching their ideas. Well, I think we could film this.
Love it. Love it.
That is genius, Lee.
Yeah, let's not do that.
No, I like that.
I've already got myself in too much.
We're talking about sort of investments and everything. So, Peter, what's your definition of success? What does it mean to you?
Again, everybody's definition of success is
exactly
as you point out. From my perspective, I've never really focused on money. I've always focused on following my beliefs and what I want to do, and always constantly trying to improve, which is a very, very frustrating outlook to have, because you never get there. So to me, success is, now if I look at the next 5 years, is can I help our firms transition to where I think the world's going to be? If I can achieve that, then I've been successful, because I think that's the biggest achievement I'm going to have to make over the next 5 years. And to me, that's what I want to do, and that's what I believe in.
Ultimately, it's helping other people, right?
Yeah, exactly. And if I can share everything I've got right and everything I've got wrong with people to help them get to where they want to get to and avoid those mistakes, and realize their dreams, I get massively motivated by seeing new entrepreneurs. And an entrepreneur can be a business owner of a small AR, or even advisor. And I look at these people and how they think and how they act, and the vision they've got and the excitement they have about what they want to achieve and how they want to improve. That's what motivates me every day, seeing people like that, and what we can achieve working together.
So we're talking about successes, and we touched on the challenges. So there have been failures in your life. What failures do you cherish the most?
The choice of football team, probably. That's one of my biggest failures. And then what else?
And you are a massive Fulham fan. We have to say that you really are.
Yeah, I am a massive Fulham fan, and I love it. I'm very passionate about my team, and whether they do badly or not. And but I'll never do a manager's job in a million years, and I'll never own a football club. So people ask me that all the time. Why do you invest in a football club? I said, because I work hard for my money. That's never going to happen. So I've made loads of bad decisions, and I think the biggest failures for me, well, some of them have been my personal investments, which have crashed and burnt and not performed. Other than that, I think where I'm being most critical of myself is making people decisions, because your natural instincts to back people and be loyal to them and give them every opportunity. And maybe sometimes I haven't made that difficult decision quick enough, and I haven't followed my gut quick enough. And some of those things have cost the business and me and my team if I haven't made decisions quick enough. I've got better at it. I'm getting more brutal at it, and I have to be, because it impacts on other people around me, not just me. So I've made a few bad people decisions over the years, but I think everybody has. And as long as you learn from it, I think that's the most important thing. And it's all part of those recognizing your mistakes and doing something about it quickly.
Do you beat yourself up about those decisions, or are you a sort of person that can go, you know what, that was really bad, that was rubbish, move on?
No, I just move on to the next decision that I hope to be a better one, and then put that one in the back of to history. And people go, well, what have you done differently, in your life? And I go, well, it's probably, if I want to write a long list, from a personal perspective and from a business perspective, I could write a book about all the things I could have changed. But if I gauge where I am today, taking into account all the huge number of failures I've had and wrong decisions I've made, am I happy where I am today? Yeah, delighted where I am today. And sometimes that's what you've got to gauge yourself by. Because if I'd done things differently, would I still be where I am today? Even though it might have been a better decision at the time, it might have taken me in a completely different direction. So I think it's all got to be. It's all relative, isn't it? Really, to where you are and what makes you happy today.
Yeah. So what would you say to somebody? Because I can I can really ruminate on stuff and think, oh, you idiot! What have you done? And I'll beat myself up for weeks. And what would you say to somebody like that? How to change that mindset? Because I think it's a really powerful thing.
It is, and I have a sort of unconscious rule for myself. Everybody needs a bit of a sulk occasionally, and I'll have one bad day. If something's gone badly wrong, I've made a bad decision, or something's fallen through as a deal, or something I want to do, the maximum I'll have a downtime on it is one day. That's it. And then I'll pick myself back and get on with it, because you've just got to. And one day, if you don't deal with it, it turns into 2 days, into a week, into 2 weeks, into 2 months, and then it starts causing you a problem. So to me, I just, whatever it is in life, if I do allow myself a day, then it's a maximum of a day. That's it.
What do you do to relax and chill out?
I'm one of these people. Maybe I'm quite lucky. I've never played sport. I've never gone to the gym. And actually, I'm probably quite grateful now, because everybody has been big and sporty in their lives and are having knee ops and hip replacements and everything else. And all my joints are like a newborn baby's. They're unused, So maybe that was the right strategy all along. I don't know. But very simple stuff really. There's nothing special in it. I can switch off at weekends. I can equally work at weekends. I can switch off at work. I'll go on holiday and I'll still work, but then I'll do it at a set point and then I'll carry on. So I do manage it all quite well, actually. So I can balance the two. But that's quite simply, I just enjoy spending time with friends, and different groups of friends, and watching sport. And, and I'm probably getting to a stage of life now where life's more about experiences than anything else. So I'm going to try and, I went to Glastonbury for the first time ever, a few weeks back.
Did you glamp or did you camp? Need I ask?
It was still a tent, and between 10 in the morning and 2 a.m. I was still in with everybody else in the main Glastonbury.
Brilliant.
So at the end of the day, and I've done 30,000 steps a day, which is probably more than I've done in my entire life.
And
combined.
Did you enjoy it? Would you do it again?
Yeah, definitely. I enjoyed the people. I loved the atmosphere. Everybody goes, "You never went to Glastonbury, did you?" And I go, "Yeah, I did." And I actually did enjoy it. I'll do it again. And there's other things I want to do. I want to go to Super Bowl fun. I want to do various other things. Even if they're not sports I like, they're big events. They're memorable. They're experiences. And I think that's what life's about, really. It's things you can remember and talk about and share with your friends. And that's what I want to try and do more of if I can.
Without being too vulgar, you're worth a few quid. But if you had to give all your money away tomorrow to an organisation, what organisation would it be and why?
It will be an organisation that I know where the money's going and that I've got full control of it. I mean, charity starts at home, and I do put a lot of money into charitable causes, but ones which are close to my heart or are run by people I know, or even just helping friends that have gone through difficulties and need help. So I'll start in those areas first, because over the years, people go through tough times, and some of my friends have, and I'll support them in what they need to do. So that's probably where I spent a lot of it. I love animals. I'm obsessed by animals and dogs and stuff. So, any animal charities, I hate seeing animals abused. That's a horrendous thing. So things like that, or anything that supports kids that, are going through tough times or illness or losing their parents and stuff like that. Those are sort of the areas that I think probably, appeal more to me to try and support.
Because you have the MAB charitable foundation as well, don't you? Yeah, which is brilliant.
Yeah, exactly. And we give time for staff to take off work time to go out and work for the charitable causes that we support. So we encourage them to take time out and do that. So everybody hopefully does that in the business as well. So yeah.
Last question from me. So if you're a highly successful entrepreneur, What 3 entrepreneurs, alive or dead, would you want to have dinner with?
Oh, I don't know. I don't want to talk to entrepreneurs.
No,
okay. That's completely wrong.
Nah.
I don't get.
I thought you'd say that.
Yeah, I don't. I'd rather meet a Fulham player, or I went to I think I went to one of the England games, God help me, one of these corporate events, and sat with John Barnes and Kevin Keegan and stuff like that. And I loved it. I love talking to people like that who are really interesting. And, football in the 80s was phenomenal and will never be repeated. And I love people with stories and history. Don't have to be entrepreneurs. They're just interesting people. And I love hearing about what they've gone through. So that's more my type of thing rather than sitting down with an entrepreneur, to be honest. Because I don't even see myself as an entrepreneur. I just see myself as a football fan.
Yeah.
Who's done well.
Yeah. I've seen brokers that are highly entrepreneurial. They're not a big business person, running a huge company, but the way they think and the way they act, it's fantastic to see. In their own way, they are entrepreneurs. Everybody is, to some degree, I guess. So no, I don't recognise the word in myself, and I don't really use it with other people either. No. I don't really like it.
Yeah, fair enough.
Yeah. They're not entrepreneurs, they're lucky. So,
back to the beginning of the conversation.
Exactly.
Right, Peter Brodnicki, it's been amazing to have you here today, and thank you very, very much.
Cheers, guys. Really good to have a chat.